that's also the ones like I think I've missed. Can I tell you a story? My first kind of share that I ever bought and how I got involved. So it was 20 when I really I started falling in love with the markets, and then two of my very close mates, still my closest mates now, Wesley and Brian. We ran an investment fund called SWB.
I remember Wesley.
Yeah, and we were investing money for like friends and for friend and family. Like we basically saw an article on the business day one day that this company called Finbond.
Yes, I remember Finbond.
Finbond had gotten a mutual banking license.
Correct.
And they were the first company to get a banking license since Capitec.
Yeah.
And I think the share price was at 20 cents a share.
Yes.
They were an old mortgage origination business,
Yes,
right?
correct, yeah.
And then they got a mortgage, what's they called, mutual banking license, so they could start taking deposits.
Yeah.
We bought that share, I think, towards the end of 2012. I promise you guys, it was 20 cents. In 6 months, it was at $2.50.
Come on.
Wow.
First and only ever 10 bagger.
Come on.
I'm looking for my next Finbond. Always looking. But I promise you, I think I borrowed like $5,000 from my brother-in-law. I think I took $5,000 from my mom.
Yeah.
But we turned like 20,000 or 30,000 rand in like 400,000 rand almost overnight.
Epic.
It was madness. And remember, this is 2012. I'm like 21 years old. I thought I was such a genius. But I had other investments that humbled me. I won't talk about those.
Of course,
ones.
that's...
Bro, this is...
Welcome to the Investment Candle podcast. My name is Chief, as you already know.
Yeah, man.
And today I'm not rolling with Nico alone. I'm rolling with Senzo.
Enzo's one of my best mates, man. Who you happen to know, by the way.
Who I happen to know.
Who said, he says, Enzo. So
He's ringing in my hand.
I'm Senzo, man. It's lovely to be here, Chance.
Yeah.
Thank you.
No, you're welcome, man.
Thank you for having me.
I'm really excited to have a sit down with you and just chat about one of the difficult, what I think one of the difficult asset class, the property stuff. I mean, many people say that it's, you always hear people say property is the way to go. But is it really?
But we'll get to that.
It's a big question, but we'll get to that.
We'll get to that. We're here to talk all things real estate. We're here to talk about property. I think it obviously garners a lot of interest because it's the one asset class that I think people understand. They know it's the stuff you can see, feel, and touch.
Exactly.
Sure.
So, but I'm here for the conversation, man. Should be fun.
Yeah.
Epic.
For sure. And my man, Nico, how you doing, man?
All good, my man.
Yeah?
It's been one hell of a week.
Yeah.
It's been very, very busy. A lot of stuff has happened, not only in our country, from a political point of view, but also in markets. Some things have happened.
What do you think? Do you think the market is quite nervous about what's going to happen with these coalitions, negotiations, and talks?
Yes. So in my view, I think we saw the rand also creep up to over 19 rand, as per the US dollar quote. And I think at the moment, it's just a matter of what direction does the ANC take.
Yeah.
And yesterday, I think it was yesterday or the day before, they mentioned about the formation of a GNU, the Government of National Unity.
Yeah.
So we have some sort of a direction as to where they'll go. And I'm just glad that we moved away from the binary option of going left or going right. But now we have some sort of a moderate
centralist type government.
Yeah,
man. Yeah, I think that's what the country needs. Obviously, I mean, I'm no political experts and definitely don't want to get into that. That's a rabbit hole.
Yeah.
But what's interesting on the political front is that 50% of all democracies in the world are going to the polls this year. Did you know that, Jens?
Yeah, I heard that this year is one of the most
a lot of elections. India just had their election, and Mexico's got their first female president.
Correct.
And Modi lost. He also didn't get a majority.
Correct.
Very similar to how things played out in South Africa on the Indian front. So it's an interesting time in the geopolitical space.
And the Brits are going to vote in about a month from now.
Yeah. Big one is November.
Big one.
The US.
But there's just so much.
That's what we all have our eyes on. It's going to be an interesting one, eh? Our man, the Don is back. He's obviously going to see how everyone's excited, you know, the rights, you know, in the US. That one obviously, I think, impacts the rest of the world,
everybody.
You know?
Yeah, I mean, obviously, whoever gets to be in power, we'll see how it goes. I mean, but it's exciting times. I think there's quite a shift in the global space, specifically in the political landscape. So
a quick one, gents. Like I was reflecting this past week on our political climate at the moment. I was born in 1993, so I was 1 year old when 1994 happened.
yeah,
Bro, I've never experienced such electricity in the air.
Is that a pun or some sort? Because we also had a lot of electricity prior to leading up to the elections. Nico, don't do that, man.
No. But that's a good one. I didn't even realize that. But I really felt like this has been our 1994. We are the similar age. If I think our age difference separated by 1 year or 2 years, but.
I'm born 92 years. Can I tell you the funny story? Because when Nico said he wants me on the podcast, I've been watching. I mean, I love what you guys do, right?
Yeah.
And I've been excited. And I saw Nico at the voting station in town on the line.
Of course.
And for me, what I was very happy and pleased to see was a lot of young people in the queues, man.
Yeah.
It's good.
I think so too. I think, yes, there was a lot of errors and queuing issues that happened, but I saw a lot of perseverance from the young people. I mean, I stayed in the queue. A funny story is I went to the wrong station first and I stayed in the queue for 3 hours and then I had to go to the right one. I stayed in the queue for 2.5 hours. But the perseverance and the persistence of young people to actually end up on the ballot. I was impressed, man.
Man, it's the only way you can really voice out. You know, it's the time where you can go and make it mark, right?
No, true.
So I think people were very eager to get that done, you know?
Yeah, I agree.
Awesome.
But anyway, I think let's do a little bit of portfolio check. So we have a portfolio that we run online. So we just kind of like have a commentary on what's been happening in the market and the companies that we're managing. And so over to you.
Cool. So feel free to chip in wherever you want to, Senzo.
Yeah, man. I love equity markets, you know. But let's see. Let's have a chat.
So overall, we have our portfolio has 7 companies, and then I'm just going to start off with who is performing the worst, going all the way up to the best performers. So
leave
number
the best
7,
for last,
yes. Number 7, we have Anglo. Mate, I would actually like you to make a comment on Anglo. Lots of issues been happening with the
corporate
BHP.
Action and
Lots of
corporate action talks, but which seems not going to happen by the looks of things.
Yeah.
Well, we'll see.
Apparently, they've kind of walked away from the talks.
Yeah, BHP also walked away from
Yeah. I don't think that deal's happening.
I don't think it's going to happen.
It's a complex deal, man. It's just multi-jurisdiction. You got all the regulators. And I mean, I don't know much about commodities in the mining space. It's also a mega deal. And I think historically, if you just go do research on M&A, these mega deals just never really work out.
Yeah.
What happened to SAB though? SAB and
I mean, I don't know how well that is done
and the Heineken deal as well.
Heineken and Distel.
Yeah.
But I'm saying with SAB and NBV, I don't know if that's been a great story for shareholders post that mega merger, you know? Well, I don't know.
Well, I think there's been a lot of management exodus, right? In terms of when AB and Bev came in to SAB, they came in with their own policies, how they do businesses. They changed the corporate culture. And obviously, people are not going to be able to stay if that doesn't work with what they want, right? So that's kind of what happened. And obviously, when you've got an internal issues like that in the governance structure, that hurts the share price, and also that hurts the business as a whole, because you've got issues that...
I've got a question though. So like, do you reckon those issues are inherent to any corporate action of the size of that?
Look, I read a book by Bob Iger.
Bob Iger.
The Disney guy.
Disney guy.
Yes,
Good
Disney.
book.
A Ride of a Lifetime.
Ride of a Lifetime.
Yes.
So one thing that because he did a lot of M&A deals in his time. He did a lot of acquisitions.
Disney's built off the back of M&A. Some good ones as well.
Exactly. Very good ones.
Yeah.
Fox and the likes. So what...
Marvel. I mean, the list is endless. I mean, Disney, ESPN.
Exactly.
Yeah.
But the one important thing that he actually mentions that I agree with is the fact that you have to let the culture thrive. When you buy a business, let it operate the way it used to operate, right? You don't have to come in and force cultures from the top, right? That's why you bought the business, because it was able to thrive on its own culture, its own engine. Let it thrive, right? Cultivate that same culture that has been in existence. So that's one thing that I think I agree with him in terms of, unless if you're buying a struggling business, a distressed business, obviously make changes. Yeah. But why break it if it's working? You know?
That's a good consideration. You as a shareholder, Anglo Platinum, right? Are you happy that talks have somehow collapsed?
I mean, BHP, one of the conditions that they had was that they're excluding Anglo anyway.
Anglo Plat.
Anglo Plat.
And also, was it also Kumba as well?
Anglo-Plat and Klumba. They wanted that to be excluded.
They didn't want
They didn't want. They said,
iron ore assets. That's interesting. I didn't pick that.
They said that the assets are not attractive to them.
Very interesting.
So
I'll disagree, but yeah.
Me too.
I don't know. To be honest, I don't really follow the mining space like that.
Yeah. But yeah, so look, I think as a shareholder, I'd be happy at the right price. More than happy to sell at the right price. But I think given the value that they were coming up with, just a little bit above the current market price, I think it was about 20-30% odd premium. Yeah. So no, man, there's a lot of externality issues that are government related that, given they could be solved, these companies could actually bounce back to the former glory. So I don't think that they were factoring that in, you know. And also the changes that are currently happening in the government and just generally in the South African economy that could potentially, we could see some really good changes come through depending on what actually happens in the government formation, right? Sure. So I don't think they're factoring that in, and I don't think it's the right time to actually exit right now because there's a lot of uncertainty, and how do you actually price in those uncertainties into the values? Yeah. Right? There's always going to be one person that loses. The buyer or the seller. With all these uncertainties, there's always going to be one person.
There's always going to be losing.
Yeah.
No, mate, I like that. But Anglo Platinum is at a negative 25.77. So you've been hurt over the past month and a half.
Yeah.
And then number 6, we have Discovery. What has been happening with Discovery at a negative 23.74%. And then we have Sun International. That was my pick. Sun International is at a negative 9.85. And then we have British and American Tobacco at negative 4.2%. Then we get to the greenies.
It's been a little bit stable.
Yeah, I also think it's been stable there. And then we get to the greenies. Shoprite.
Oh, man.
Any person.
Can you say like, bro, like the thing, and I find real estate deals, man. Yeah. If I see a Shoprite lease, it's a deal. You know what I mean? Like, bro, these guys just know how to run a business, man.
They know how to be proper retailers.
Everyone's lunch, bro.
Yeah.
Basically. I was like, it's unfortunate, like Pick and Pay, Spar.
Yeah.
Obviously, you know, like strategic mishaps and just unfortunate. Yes. Yeah. But it's just, I was saying to someone, like, I don't think we've ever seen in an industry as what's competitive. Yeah. There's not a lot of barriers to entry to retail. Like I could set up a shop and start stocking it up, like wholesale, start stocking it up. Right? But you've never seen a company dominate like this for such a long period of time, so consistently deliver for shareholders and just stick to strategy. Like, man, and I've actually just finished reading Whitey Basson's
me too.
The
biography.
Yeah, man, and it's just and it's just
Whitey.
It's the culture. It's still there. Like Whitey, man. It's just the culture. It's like the counting cents, penny pinchers. Bro, there's a story in that book, right? Sorry, like there's a story in that book. They said Whitey was going around like in the early days, right? Yeah. That acquired, you know, they acquired bazaars and a whole lot of, and he went around one of these stores and he goes to a manager, and the manager's there and he goes like, so what are your top 20 selling items at the grocery store? Yeah. Like, and then the guy goes off, boom, boom, boom. He's like, what are the prices? Yeah. And he goes, okay, I don't know, like a box of cigarettes, this loaf of bread, milk. And he's like, okay, cool. And what does the guy next door sell them for? And the guy didn't know, and apparently he got fired. It's like, no. It's like, you should know what your competitor is. Because in retail, if I go and there's a loaf of bread and it's 50 cents cheaper, I'm definitely going, because it's commoditized, right? So he was like, if you don't know, how are you competing? It's just, bro, ShopRite's, amazing. And then there's on the digital side, the stuff they're doing, like on the delivery with they just out there hiring some, like I have a mate who's a software engineer who just got poached by them, like they just hired him. And it's just like amazing the stuff they're doing, man. Like like that should be the cornerstone of any portfolio, I think, in South Africa. Like if you don't know, like you just know they're going to deliver consistently.
Yeah. No, I think.
What did they say? Retail is detail.
Isn't the detail? Yeah.
Yeah, that's it, bro.
Yeah. Look, I think
I could never be me, but hey, I'm happy to own the stock.
This is amazing. I'm enjoying this episode already.
I think ShopRite should be one of the most dominant case studies to be studied even at university.
Quite
because
Man.
it's such a brilliant business, man. Like
Quite right, yeah.
the culture is good.
Yeah.
They make right investment in the business.
Yes.
I mean, look at
And it's
how-
customer. It's all about the customer.
Exactly.
It's just customer,
Another
customer,
element
customer.
I like about ShopRite is knowing where you've gone wrong and backtracking
Exactly.
immediately, especially with the
Exactly.
African play.
Exactly.
Yeah, they got out of Nigeria as quick as they got in.
You know, how many businesses...
They gave businesses away. Like, hey, whoever wants
Like
it, you can
the
have it.
African
They're
market is
pushing,
very
they're pushing
difficult.
big now into the township, and that's
Yeah.
where they're ahead, I think, of the competition. Like they're really capitalizing on the township economy.
Yeah.
Because where else do you grow in the retail market in South Africa, right?
No, that's true. But Senzo, like what I wanted to say is that how many business people develop a huge hubris and pride, especially when they've expanded into a new market, although they know that it's not working. And for them to put away that pride and say that we're actually scaling back.
We've
I
seen
think
with
that's amazing.
Spa, it struggled quite a bit in Poland.
Yeah.
And
Yeah.
they kind of stick
And
to
they
their
took too
guns.
long. They took too
They tried to
long.
renegotiate with the retailers.
Spa's
Exactly.
biggest problem now is the thing they cut with the enterprise software, the SAP rollout. I don't know if you guys read about that.
Yeah.
So that's what I'm saying. It's
But
like
look-
it's like ShopRite. It's so bad because ShopRite is executing on strategy,
Yeah.
and then their competitors are making mistakes.
Yeah.
That's like the best place you want to be in.
Yeah.
It's like
No,
your
it's true.
competitors are dropping the
It's true.
ball, and you just you're just eating them
You're
up
picking
every
up the
single.
broken pieces.
You just like six love every single day.
Yeah, it's true.
But
It's true.
ShopRite as well had issues in the past of ERP installations.
I think I don't know of any retail business that hasn't had issues with that.
The ERP,
Yeah.
Because I mean,
Because
to
you think about what you
digitalize
gotta
all those
manage.
things, it's
Yeah.
gonna be
Yeah,
quite a
it's too
difficult
complex.
process.
It's
It's a
too
complex
complex.
thing.
But think
You
about
can
how
mess
many
it up.
items of stock you've got.
Exactly.
Right?
So
Like,
many
like
SKUs
hundreds
in
of
the
thousands.
stores.
Hundreds of thousands, and
It's too
and you're
much.
managing the warehousing and making sure you got
Yeah.
inventory at the right stores
Yeah.
at the right time, and you talking to your demographic in terms of how you stock the shelves and
Yes.
stuff like
Sure.
that. If you don't have the right technology, you can mess that up like properly. you
But
know?
I think the big thing about ShopRite is that they were the first one to make those mistakes and learn from them.
Yeah.
So they made the first investment of trying to
Sure.
get into installation of the ERP and all of those things.
100%.
You know, so that's what made it quite easy. With Spa, it's even much worse because that's a distribution business, right?
Yeah.
They're a franchise business. If
Correct.
you mess that up, you messed up the whole business.
No, it's true.
You know?
It's true. It's true.
So it's
I juxtapose Spa and ShopRite, and then I put pick and paste somewhere in the middle as far as and I'm not talking about performance. I'm talking about the business model and operations. And I think to your point about doing something and then learning from it quickly, I think that's one of the advantages of being the innovator and the first mover, and that you can experience these mistakes early, learn from them early, and then sit back and then watch your competitors, if they don't learn from you, make
Yeah.
the same mistakes,
Yeah.
and you just pick up the pieces.
Yeah.
But ShopRite is there, and then number 2, ShopRite has been deposed from number 2
I said by
Naspers. I'm going to speak a little bit about Naspers.
No, but Naspers is a market mover, man. Like
Yeah.
one gain in Naspers
It's so- 'cause it's so
Yeah,
big.
it's so big.
I don't
it's
like
so
it,
freaking huge, man.
I love it.
A lot of people love. I've got friends.
I absolutely love
Naspers, you know,
Naspers.
it's like, you know why Naspers makes me. It's like now it's like with Nvidia. Like
Yeah.
it's one of those things that it was the darling of the chassis for so long, and every time you look at it on any metric, it looks expensive.
Yeah.
I've never owned a Naspers share because every time I look at expensive, and then it does 200% or 100%, and all my friends
then
are making
you're like-
money, and I'm here like holding the bag, like, hey guys, like, what? But I'm like, why is this thing railing? But I don't know. So
Well,
I've
okay.
just never been a fan.
I'm going to speak
Yeah,
a little bit
yeah.
about Naspers, but before I get to Naspers, it was, okay, did I mention ShopRite is at a positive 11.35, and then Naspers is at a positive 13.03, and then number 1, which has been number 1 for quite some time, is Capitec.
Capitec, yeah.
Capitec is at a
They're
plus
pushing into
4.
Eastern Europe now. I don't know if you guys follow the
Yeah,
movements, but,
we are active shareholders. we are active shareholders
Yeah,
of
man,
Capitec. Yeah,
I saw something. Bloomberg released the stats. It is insane. I think, and if you invested 100,000 in Capitec on the listing,
Yeah.
and then obviously compounded, invested all your dividends, I think the number, you got to double check in this, your investment will be worth 125 million.
from
If
how
you
much?
invest-
100,000 rand.
From the time they listed.
From the
I know
list.
the percentage. So the percentage is about 200,000%.
It's 125 million rand. Go do the maths. I could be wrong, but I'm pretty certain that's the guys. But it's madness.
But you know, investors, please let us know. Fact check us.
Let
us know.
But I put my head on the block on this one. But again, that's also the ones like I think I've missed. Can I tell you a story? My first kind of share that I ever bought and how I got involved. So it was 20 when I started falling in love with the markets, and then two of my very close mates, still my closest mates now, Wesley and Brian, we ran an investment fund called SWB.
I remember Wesley.
And we were investing money for like friends and for friend and family. Like we basically saw an article on the business day one day that this company called Finbond.
Yes, I remember Finbond.
Finbond had gotten a mutual banking license.
Correct.
And they were the first company to get a banking license since Capitec.
Yeah.
And I think the share price was at 20 cents a share.
Yes.
They were an old mortgage origination business,
Yes,
right?
correct, yeah.
And then they got a mortgage, what's they called, mutual banking license, so they could start taking deposits.
Yeah.
We bought that share, I think, towards the end of 2012. I promise you guys, it was 20 cents. In 6 months, it was at R2.50.
Come on.
Wow.
First and only ever 10 bagger.
Come on.
I'm looking for my next Finbond. Always looking. But I promise you, I think I borrowed like 5 grand from my brother-in-law. I think I took 5 grand from my mom.
Yeah.
But we turned like 20 or 30,000 rand in like 400,000 rand almost overnight.
Yep.
It was madness. And remember, this is 2012. I'm like 21 years old. I thought I was such a genius. But I had other investments that humbled me. I won't talk about those.
Of course,
ones.
that's...
Bro, this is
But
epic.
my point is, I think obviously they were doing the micro lending thing, but obviously Capitec has got rights is the balance between capital light businesses and capital heavy. And obviously as a banker, what I mean is they actually, you've obviously when you're lending capital, you run the risk of impairments or credit losses.
Yeah.
Correct.
Whereas they've got now a strong transactional banking platform, which is that's where you make points of sale.
Yeah.
And that then obviously substitutes for the heavy unsecured lending business. And then apparently they're pushing into home loans I hear now.
Yeah, and also business banking
And
as well.
business banking and home loans, which is not as risky as the unsecured stuff.
Fantastic.
But again, man, it's just that
Wonderful.
just management, execution on strategy.
Yep.
Yeah.
They're
Look,
good.
I think if we've seen, right, like businesses like Discovery as well, businesses that are still have that are founder led, you can see the culture. The culture is still embedded there, being entrepreneurial, you know, like the hustling, they're actually getting to be customer centric model. Like you still see those things. I think even that at Capitec, you can see that DNA still coming through, that they're still very much customer centric, still very much entrepreneurial, all those things.
But the co-founders are slowly but surely. In fact, the last co-founder that I'm aware of is actually the CEO. Yeah. From him, it's going to be totally new people.
Yeah, but I mean, I'm sure it's still going to be running and that DNA. I don't think there's going to be much changes in the next few years.
Okay,
I think that's going to be a test for Discovery. When Adrian Go leaves, I think that's going to be a massive test for Discovery.
Yeah.
But that is the portfolio check. On the Naspers side, my comment there has been the new CEO, of which the market responded very, very well. So we remember that Bob van Dijk left unceremoniously, might I add. And then
apparently shareholders didn't like him much.
Bro,
Here's the shareholder. Did you like it?
Listen, I've got a bit of an interest in Naspers, so I can't really comment too much like that.
So
so when Bob van Dijk left, it was Irvin Ju, who was a Goldman Sachs banker, who held the ship for 8 months. And then they recently announced Fabrizio Blasi, who was the former CEO of iFoods, which is the largest food delivery business in Brazil. So the chap has a bit of a track record. He started off iFood with about 20 people startup to now it contributes about, the number says it's about 0.53% to the Brazilian GDP.
Wow.
That big. So the market reacted very, very well because now you have at the helm someone who's operated, who has a track record of actually scaling businesses, which that is fundamentally what, in my view, Naspers process is. Find businesses, grow them, and then sell them.
And occasionally make a $30 million investment in China. That
That turns out to billions, eh?
That turns in okay.
I'd like to get your guys' opinion on Capitec before we wrap up with the thing. The AGM, what happened last week, and there was a question which one shareholder posed to Harry Faruri about where is the where is the threat coming from as far as Capitec's concerned, like competition? And he said something very interesting. He said that the competition is not necessarily coming from another bank, for example, Mutual Bank and stuff like that, and Time Bank and all that. He said that the threat's coming from international technology companies that are offering banking services. I thought that was very, very interesting. So your Apples.
Yeah.
But I did mention this to
What do
you.
they call these things? They call them nanobanks or something. Like
There's nanobanks.
There's a term that's
There's a term for
There's
it.
a term that's out for neobanks.
But I did tell
that
you
are
this.
they're just digital. Like they completely.
But I did
everything's done.
mention it,
I
yeah?
did mention it that if you look at the amount of data that the different businesses like retailers, like cell phone businesses, like telcos and the likes possess, and the clientele that they possess, obviously if they start kind of offering banking solutions, they're biggest threat. Because of the customer value that they have. They've got quite a wide range of customers. So I mean, even ShopRite has this money market thing now. You have a card that zero fees and all of those things. So you can imagine, like,
once you've got a catchment group, right?
Yeah,
like
exactly.
It's like social media companies. If they had to get into financial services
network
somewhere
effect,
because people are always on Instagram, whatever. Like you've just got like all that attention, So I think that's going to be interesting when the attention economy, as they call it, fuses with financial services. And just because everyone's always on. I mean, they call them these. What do they call them? The super apps, where you're going to be able to do everything on one thing. I think WeChat is an example of that in China. And I think a lot of the American platforms, I think they said Elon Musk's plan for Twitter or X now was to make it into a super app. Because once you get people's attention, you can get them to do anything because they're always there. You know what I mean? It's like, oh, let's try this out. You know, so that's going to be
so now my question is that how do banks combat this? It's a threat that needs to be mitigated. How do they do it? How do they innovate faster than Apple?
My view is that banks have an advantage because on the regulatory side, right?
Sure.
And in South Africa specifically, I think it's almost like an oligopoly. I'm going to be careful how I use the word, but in that the incumbents have been around for a very long time. And they call them systemically important banks.
SIFIs.
Like you can't.
Too big to fail.
They're too big to fail. I mean, I don't want to say it, but that's it. So I think that you're not just going to. Probably it is because of the regulation of very high barrier to entry business.
Sure.
And I think once you establish your position, you've got almost like a leeway and rope to make some mistakes because you can't, you obviously put the whole economy at risk. So I think that's where the Capitec, and you call it the Big Four, Big Five, whatever you want to call them, that's where they have the advantage. It's just like, they've got the regulators on their side and they manage money and have on a fiduciary basis deposits or whatever for a lot of the working class population where they need, if anything were to go wrong in those banks, a lot of people would get in trouble, a lot of companies would be in trouble. So it's almost a case of too big to fail. But I don't think anyone should run their business with like, oh well, we can do whatever because we're too big to fail. I think people got to be prudent.
I think you're quite right. I'm thinking about it now, and things such as, for example, Cody, right? The what does Cody mean again? It's the insurance scheme for deposits. For deposits, right? I think that's going to be key.
So like America has the FDIC, right? Which was very topical when all these regional banks in America, because essentially if there's a percentage of deposits that should be insured should a bank fail.
Exactly. So you're right. I think I wanted to speak to your point about the regulatory environment. I think that is a big advantage that banks have. So for example, now if these neobanks want to get into the banking space, what they have going for them, in my view, is that they've got a bit of freedom that they can do a lot of things. But now when you get into an industry such as banking, all of a sudden that freedom to do a lot of things is like, you have to now operate within the realms.
Yeah, man, the biggest cost for banks is regulatory costs. There's a lot of stuff you can't do, and you've got the SARB and the FCA and all of these other acronyms that they watch dogs like, bro, they're on you. They're on you.
Bro, with Fisca has been dealing.
Fisca, like think about how many, I don't know how many regulations banks
that's quite a lot.
They have to deal with, you know?
NCR, Fisca,
Bro,
FICA,
yeah, I mean, like you said,
it almost that's when they wanted to introduce Basel, what they call Basel 4.
Yeah.
Like it was very topical now. And Jamie Dimon and all of these bankers in America, they went and fought it because it's like you're gonna make the regulatory burden so much that we actually can't do much. And I think there's a bit of scorn sometimes, I think, between regulators and banks, because banking is a very profitable business, and parts of banking still are very profitable. Investment banking, trading, those type of people still make a lot of money. So I think regulators sit there like, how can we make these guys' lives a bit more hard, you know? But it's still a burden and especially on the, call it, more every day-to-day man on the ground. You want to make it simple for people to be able to get bank accounts, transact, for businesses to get access to liquidity, your everyday sort of banking services. You don't want it to be too much of a burden, but obviously you want the system to be safe.
I was about to say.
You want the system to be safe.
I was about to say, mate, there has to be a balance with what you're saying.
Yeah. No. That's what it's a tough balance, but that's why it's a tough balancing act. Yeah,
I mean, it's a burden up until there's a financial crisis.
Yeah,
exactly.
Then what happens?
No, I think the biggest moat for banks is their ability to take deposits. I mean, if you can take deposits and lend it out, you take deposits at a very low cost.
So that's the model, right?
That's the business.
That's the model.
Yeah. So whether ShopRite, MTN and the likes can come into the mix, but the biggest moat that the bank has is like we've got capital. We've got cheap capital that we can be able to be flexible to do a lot of things, you know.
Bro, this has been the most exciting portfolio check I reckon you've ever had.
Well, thank you, guys. I guess it's a compliment.
This has been
I definitely don't keep my opinions to myself when it comes to the market.
This has been an exciting one, brother. Let's before we get into real estate, let's chat a bit about the investment candle challenge.
Yeah,
and how we're doing. I've got some numbers for you, bro.
Yeah. I mean, run through the numbers, man. I think to be interesting to know. So far. Well, okay, it's worth mentioning that we've launched this on Monday. Yeah. So we've got a whopping 14 entries. I think it's absolutely amazing. I've been part of, because of where I work, I've been part of many product launches, and this is good. A silent launch and then gaining momentum as we go along. Got 14 entries. 31% have never invested before. Their first time. Wow. Going to be introduced. Man, that is lovely. It's through the investment channel part. We need a button.
Exactly. Guys, what you guys are doing. For me, that's why I don't really want to be on platforms like self-promotion. Especially because of the work that I do. You kind of need to be under the radar. Yeah. But for me, it's like the educational piece and just getting people, young people, interested, people from previously disadvantaged backgrounds, people that look like us.
It's true. Exactly.
Yeah, man, getting them more interested in finance and the markets. 100%. That's something I've always been very passionate about. I mean,
that's the inclusion, man. I mean, the people that look like us have been excluded from participating in things like this. That's epic. And sharing the information and incentivizing them to actually participate is what we want trying to do.
Epic. 43% are employed professionals. And then here's where it gets interesting. So because the competition is based on your best 5 pick of stocks, the best first pick that we've had is Capitec. The best second pick that we've had is ShopRite Holdings. The third,
I'm not surprised.
the third best has been Nasbis. And then the fourth is Absa Group.
Oh, wonderful.
It's quite popular amongst the folks that have entered. And then number 5 is Process. But that is the investment candle challenge so far. And if you want to enter and stand a chance of winning 5,000 Rand, look at our social media and click on the entry form and make your best 5 picks. At the moment, we're only limiting it to the Johannesburg Stock Exchange. So the company has to be listed. But we've made it very easy for you. It's literally a drop down.
It's literally like a drop down.
It's a drop down.
That's
all
cool,
the companies
man.
on the
I should get involved.
Yeah,
I fancy myself as quite the stock picker, just based on football alone.
I mean, that's the first thing,
bro. But competition does end. Not end. The entry to the competition ends at the end of this month. So you still got time if you want to enter. By the end of June, then that opportunity for you to enter and standing a chance of winning 5,000 will come to a close. But that is the investment candle challenge. So get involved. We'll drop a link as to where you can actually sign up to be involved.
Yeah,
Yeah.
definitely. Look, I think I quite remember what we did on the JSE challenge as well.
Yeah.
JSE when I was in varsity.
That's how I first met Senzo.
Oh, really?
It was through the investment JSE with Wesley.
With Wesley and Brian, I think the guys we came, were we second runners up or?
I remember.
Or something
I'm not sure if you
we
remember.
were far off, man.
Bro, Senzo, I'm not sure if you remember. In fact, the first time where we had a meeting, we actually went to the JSC and we met Ralph Spears. I'm not sure if you remember that meeting.
Yeah. Nico, it's a long time ago, man.
Yeah.
Yeah, it's a long time, but it's crazy. Bro, you know, sometimes like I'm not big on social media, but I go to Facebook these days.
Yeah.
I'll go check my memories.
Yeah.
And a lot of my stuff I used to post back then, I was so passionate about the markets.
True.
Yeah.
And bro, I'll be like,
Same.
I was 17 or 18 and I was writing about JC and stocks and I'm like, and for me, and I see that now I'm 31 and I'm like, I'm kind of like in finance and I do what I love and I'm just like, just passion, bro.
Exactly.
Just passion, you know, just loving. I've always loved it, you know.
Yeah. That's why I invited him. No, bro, I saw
Now
that
I
in
know
us as
why.
well. It's the same thing. I saw it with us. Well, okay, I thought I was the only one like that.
Yeah.
And then when I met Chifiwa, it was the same thing.
Like
and then you as well. I'm like, it's the same thing.
right?
It's the same energy.
It's
man.
the same thing.
It's I think the market requires that passion, man, because otherwise,
I thought it's a full-time job. Otherwise, man. Think about reading and research, and then man,
exactly
the temperament and just the emotional. Like losing money is not nice.
It's really
you
not
go through
nice.
it, right? And then if you're not really passionate, like for me, it's the learning, right? And you're always learning. If you invested in the markets, reading up on these companies, it's just like all this information and just loving finance and like, and you think like, so for me, it's always the learning part that I love more than anything. Yeah.
So what do you think now? Let's move into the real estate. What do you think is the biggest approach? Do you invest via the stock market or do you actually invest in a physical property, buy property themselves? Like which one would you say is been in historically from creating an alpha perspective? Alpha is like profit to those that don't know.
Yeah.
What do you think has been proved to be the best approach?
Yeah, I mean, real estate investing, obviously, like I said, garners a lot of interest because people know what property is. Most people have real estate in the form of their own home that they own, which it is an asset.
Yes.
It's immovable property.
Yes.
And there's two ways that you kind of generate a return from property. It has fixed. The beautiful thing is that it's a great wealth preservation tool and it's also a great wealth creation tool. You get a fixed return through rental income, which is usually contractual. So it's predictable, stable cash flow. And then you also get capital growth, which is the increase of the value of your property over time. And that's usually caused by inflation and supply and demand dynamics. But then what 2008 taught us, the financial crisis, that people have this assumption that property prices go up in a straight line. They also can come down. You're seeing it playing out particularly in the Johannesburg residential market at the moment with immigration, a lot of people moving the Western Cape and just generally service delivery and poor governance in Joburg. You can't sell a property. I have mates who've bought like apartments maybe 7 or 8 years ago. They can't sell them for what they paid for them back then. Right now.
My God.
So property, you can lose money in property. So I guess that's a fable, or I guess a fallacy that's out there that you can never lose money in property. You certainly can.
Definitely.
And then there's obviously
but I mean, if you look at it this way, right? Yes, the fair value comes off a little bit to below cost, but the income that you've accumulated over time, still, if you look at it from a total return
you've got a total return, but I'm saying you could be in the red.
Yes,
like don't think you're not going to be.
Yes, definitely.
Because one, you've got to look at real return, and also you've got operating costs. That rental income, it's got to pay rates, it's got to pay taxes, it's got to pay insurance, it's got to pay the bond, maintenance. Assuming most people, you can't finance a property. It's not clever to finance a property just using equity. That means you own money, the bank's money, because there's a tax advantage to that.
Yeah, correct.
So you could be in the red, bro.
Yeah,
so
definitely.
If your rental income's not growing and your property price is down, your total return could be negative. Especially if that fair value portion or that capital growth portion is like it's a big sort of impairment or it's a big negative growth.
Senzo, I want you to go back a little bit. You said that it's not a good idea to finance your property investment through equity. And then you said that if you go via the gateway, there's some tax advantages.
Yeah.
Can you please just speak a little bit about that? Why is it a bad idea for me to take my own money to finance my the investment?
So look again. I'm no tax expert.
Sure.
But the idea is that if you incur an expense according to the tax code or the Income Tax Act, if you incur an expense that is in the production of income, so if you a business expense that where you're making money, you incur that expense in the process of making money, you are able to deduct that expense for tax purposes.
Tax purposes, yeah.
Financing costs form part of the expense. The interest that you pay on your loan is an expense. So if you have income producing a property, so this doesn't apply to your residential or primary residence. If you're earning rental income because it's in the production of income, you're making money, that interest that you're paying on the bond, you can deduct it, and then it becomes it obviously lowers your cost of capital and your tax burden. So it's cheap. It's become, in that sense, it's cheaper to use. That's why you borrow money. It's good to have some debts on a property. Even if you've got all the money to buy it cash, it's just, it makes kind of sense in that way. But that shouldn't be the reason why you go and get the debts. Like, I just want the tax advantage. I'm just going to do it for the tax. It's got to make sense in terms of how you structure your capital structure. But that's essentially the concept and idea.
Amazing. Yeah.
But also there's added benefits of actually amortization of that from a tax perspective. If you've got a property that you generating income on, you can actually claim the allowances based on the cost of the property.
Yeah, I mean, there's all sorts of
there's all sorts of
allowances for commercial property. No, there's a lot of tax advantage. Where the
first property tax incentives exist.
Yes.
There's a lot of things that actually incentivize you to actually be a property owner.
Yeah,
No,
epic. Yeah.
So it's very interesting. So I think bottom down to my question is then is it better for me to own a property or is it better for me to invest in the JSE structure?
Okay, so I was going to get into the second point. The other way, this I was talking about the most common one is people know is owning direct physical property.
Yeah.
The other way you get exposure to property is on the JSE. There is an index or a subset of the JSE where called REITs, which is real estate investment trust.
Yes. Yeah.
So this is a form of corporate structure where you can apply to be a REIT through the REITs Association. You apply, you become a REIT, and basically the stipulation is that it's any company that derives its income from the trading and running of commercial property.
Yes.
So a lot of these are basically commercial landlords, to put it simply.
Yes, commercial landlords.
Some names you might know, big ones, Growth Point Properties, which owns 50% of the V&A waterfront, High Prop, which owns Canal Walk. There was Liberty to 2 Degrees, which owns Senson City. These are some of these.
I actually didn't know that.
There's Redefine as well.
The REIT status.
Redefine,
I didn't know that the REIT status only is applicable to commercial properties. I thought even residential properties do qualify for the REIT status.
No, you've got to run it as a commercial enterprise. Okay. So I'm trying to think what's the name. There is a REIT called Indlu Place that did just commercial property.
Okay.
Just residential property. So they own blocks of apartments all over South Africa.
Yeah.
So let me correct myself. That when I say commercial, as in you must run a commercial enterprise, as in you run it like a business.
Yes. Okay.
But as long as you're in property, it can be residential, it can be across classes.
Okay.
So it's not just commercial property in the sense that like it's office buildings and retail. It can be, but when I said commercial, I was talking in the sense of it's got to be a commercial enterprise where the income is derived from the trading and running of properties.
Yeah, well understood.
No, and well said. And then just to speak a little bit of numbers, how big is the market according to your view, the REITs market and also the private market? Do you have
I don't have those numbers, bro. These companies are massive, right?
I mean, look, Growth Point is massive, man.
It's huge.
I'm sure we can put it up. Look at the market cap of Growth Points and Redefine. These are
like Redefine.
I know Growth Points has more than 300 properties, 400 from the portfolio all over, and it's across office, retail, residential. I don't know how big the number, so you can, the actual property index inside, but it's in the hundreds of billions of rands.
So it's even more. Okay, this is, okay.
Just growth points. What's the market cap of growth points?
Okay, I just,
that's the biggest one, right?
I just Googled the size of the property market in South Africa, and this is according to Stats SA.
Yeah.
Not Stats SA, Statista.
Yeah.
They say that commercial real estate in 2024, commercial real estate is close to all of it together. 2004 is 1.2 trillion US dollars.
It's massive, man.
It's
no, but
massive.
this is obviously public and private markets.
Yeah,
right?
this is massive. It's both.
Yeah.
It's
massive.
Just commercial.
On the
commercial and then residential. Yeah, it's both commercial and residential.
Okay.
So it's 1.2.
Yeah, look, property. I mean, think about it. Look at all the buildings you see around you.
Yeah.
That's the thing, a beautiful thing about property. Like you see it,
You can
right?
see it. Yeah.
I mean,
all
how
of
much
these-
is if you look at from a cash flow perspective, right? If you discount the cash flows to actually make a value, come up with a value for one building, for example.
Yeah.
Look at how much Discovery is paying for rent.
For rent.
That's massive.
Oh my gosh.
You discount that cash flow over freaking
my
Oh man, these
20.
buildings
It's
are worth,
massive.
these buildings.
It's massive.
Oh
you know?
my word.
Yeah.
So I can,
Bro,
I
the
can
V&A
imagine.
waterfront, which is like the crown jewel, I think, of SA real estate. I think the and Growth Points owns half of it. The other half is owned by the PIC.
Yeah.
I think in the latest financials, they
Isn't there still a family that is involved in the?
it's
waterfront.
well, it should be.
I don't remember.
It's PIC and Growth Points.
Point.
So it's
Growth
50-50, yeah.
Yeah, so the market cap of Growth Point is it's close to 40 billion US. Not US, it's rands.
40 billion rand. Is
Yeah.
that's one REIT.
That's one
That's
REIT.
the biggest REIT
yeah.
for the audience. That's the biggest real estate investment trust.
Yeah.
They own, like I say, 50% of V&A waterfronts. 10 billion of that 40 billion is the V&A waterfronts.
Wow.
That's one asset, yeah.
I mean,
Are you for real?
Cape Town property prices are massive, man. Like they're massive.
But a whole 25%?
yeah, they're
Yeah, I
massive.
think, look, I must just double check. I think the whole thing might be worth 10 and then their stake worth 5.
Oh,
And
yes.
it's not the entire
I
assets because they own half of it, right?
I hear you, I
I
hear
think the
you.
whole
I
assets
hear
worth 10
you.
and their is worth 5. But I'm
But
saying
why would you be surprised? I mean,
it's massive, bro.
It's massive. And look at
it's
look at
massive,
the
it's
property
massive.
prices in Cape Town. Like just one apartment, right? Like I get
Goodness
this
gracious
promotional materials from what's this company? Pem Golding.
Yeah,
right.
yeah, yes.
So Pem Golding, they're doing this, developing a building, a property block in Sea Point.
Okay.
So they send me, they're like, we're doing this. You know what they do in the promotional materials? They show you the pictures first, and then they go down and tell you what the prices are. So then they're like, from a studio to like a 3-bedroom, the prices are 3.2 million to
Studio. Studio.
That's studio from 3.2 million to like 15 million, 16 million. I'm like, what?
Yeah, I think it's a perfect storm in Cape Town right now, especially in the Atlantic seaboard.
Yeah.
There's a couple of things playing out, right? So you've got the semigration, which is by definition the movement of people within a country in South Africa, in the sense it's other parts of the country into the Western Cape.
Like me.
I think like me, you're a semigrant. I've been here 7 years, I'm a semigrant.
Yeah.
There are more people, I think the stats was from Westgrow last year. I think 30,000 families moved to the Western Cape last year.
Wow.
But not just Cape Town, the broader Western Cape. But
Yeah.
think about it. That's 30,000 people, not families. So families, 30,000 people. Permanently moving. That's massive.
That's
right?
massive.
That is massive. So you've got
30,000 people is massive.
You've got to solve for that demand, right? And obviously the Atlantic Seaboard and the city center, most companies are based out there. You think the V&A, you think town, the actual city center, and people want to live out there. So you've got all these amenities. You've got the mountain, and
You've got the beach,
and you got the beach,
prom,
and you got the promenade. So that's driving this. Which the question is, how sustainable is it?
Yeah.
And then you've got, so that's the first thing, semigration. And then the other one is that you've got good governance.
Yeah.
Which people feel like you don't have in the rest of the country. Obviously, we all know the Western Cape is run by the DA, and you get service delivery in Cape Town. You get good governance. I mean, that's the sentiment. And then the third one is that foreigners love this place, right?
Yeah.
The Europeans, they come here. They can't believe they're in Africa, but it looks like Europe. And then they're spending rands, and then they bring their pounds and their euros and their dollars. And then
and pushes up the price. Right?
It's
insane.
So it's almost like I say, it's a perfect storm. It makes me a bit nervous when I see some of these prices. How long is it going to go on for? We don't know. But
is it a bubble?
No, don't ask me those type of questions, Nico. I don't know, man. I don't have the crystal ball. All I'm saying is, when I start seeing two bedroom apartments for 6 or 7 million rand.
That's immense. That's
and you
crazy.
got no beach views.
Is this okay? Let me not say it's a bubble, but like, does it look like bubble nyana there?
No, I think I would,
No bubble nyana. Like, hey,
look,
bro.
I think it will come off a little bit.
Yeah.
There's got to be a ceiling at some point.
Yeah.
I think there's got to be a ceiling at some point. I mean, it's not like a studio apartment is going to grow to like 16 million rand. Like, that's
you
ridiculous.
You got to ask yourself. Like, you got to ask yourself. Is like. At some point in Cape Town, the wage growth is not going to keep up with rental growth.
Yeah.
So then you can't get to a point, and that's where that's just pure economics.
Yeah.
You can't get to a point where people can't afford to rent
Exactly.
because nobody earns that much to spend 40,000 rand a month on rent, and you still got other living expenses. So then automatically it self-regulates. I think at some point it's going to start to kind of self-regulate.
I think we're already there. Just that the gap is maybe not
I might
too
have to
big.
move out of my position.
Senzo, like this is the beauty about having you here, bro. You mentioned the economic dynamics of wage growth keeping up to tabs with some of the property prices and asset prices.
Yeah.
That's very important. Can you please just break that down?
I mean, it's just pure economics. I'm saying,
it is.
If you look at rentals in Cape Town, I mean, on the Atlantic seaboard, right?
Yes.
A 1 bedroom is going for like 17,000 rand. That's a 1 bedroom, 45 square apartment.
Yeah.
Which, by the looks of things, this trend is only going one way.
Going one way.
And if rentals are going up 10, 15% every year, your wage growth is you're only getting 5%. It's not 6%.
That,
So at some
5% if you like it, 3%.
And as a rule of thumb, right, they say your rentals should be 30% or a third of your disposable income, or your, whatever. So at some point, when you're spending 60% of your income on rental, it's just not sustainable because you've got to eat food, you've got to travel, you've got transport, you've got to transport yourself to and from work. At some points, it just doesn't work anymore, right? So I think
the math is not mathing.
So the math stops mathing, bro.
Yeah.
So I think that's just one. I mean, obviously, like we can talk about the residential market of the Western Cape, which is very topical at the moment. But I mean, I think more for the audience is how do they get exposure? I mean, we're talking about REITs. How do they get exposure to the property market? Because they certainly can't. I don't think most of us can afford to be buying properties on the Atlantic seaboard in Cape Town at the moment. But I mean,
Speak for
we're talking
yourself,
about
James.
REITs, right? So I said there's all
Speak
these
for yourself, James. Speak for yourself. I'm joking.
Might just buy an apartment tomorrow.
We know you made a lot of money on South
Bro,
so
it's Capitec paying for the apartments in Clifton.
Yeah.
No, listen, man. So there's all these companies. The easiest way to get exposure to property is to buy yourself some REIT shares.
Yeah.
And the beautiful thing about REITs ownership is that it's liquid.
Yes.
It's traded on the JSE.
Yep.
And if you own direct property, which is already difficult, like let's say you wanted to buy one commercial building that has a coffee shop and a bookshop and an apartment on top, that thing will cost you 5 million. So whatever rate is the country, 6 million, whatever it might be.
Yes.
You're going to have to finance it, you're going to qualify for the loan.
Yep.
Think about it. If I buy Growth Points or I buy High Prop or I buy Redefine, I'm buying into a counter that owns 200 properties, so I'm diversified, versus if I have this one single property where if it burns down tomorrow, like the thing goes belly up.
Yeah.
They know how to manage property.
Yeah.
This is their business. Yeah. And REITs are by law
required to pay
75% of their profit out as so you get a fixed return, which is called distributions.
Yes.
And then you also get the capital growth from the shares, which go up. So it has the return profile of property, which I said, which is the income return and the capital return. But then you when you're buying into like a high prop, you buying like Canal Walk Shopping Center, you buying like Rosebank Shopping Center in Joburg. That's what you own. You own your quality assets, and then you can that stuff you own for a long time, And there's I mean I don't know how many REITs there are listed in JSE, but there must be 20, 30. I mean there's a lot.
That's quite
of names. There must be 20 names at least.
Can I jump in here? We've got questions from people who follow the Investment Kennel podcast.
Yeah.
We asked them to send questions, and I think we're getting a masterclass here. So I think we would be remiss to not to some of these
Fire
questions.
away.
So this is coming from Ziboze. Excited for the episode. My question is, what are the important factors to consider when evaluating potential real estate investment opportunities? this is coming from Zimbabwe. What are the factors to consider?
Yeah.
Okay, yeah, I mean, that's a loaded question. It's not as simple. The answer is not as simple. And obviously, because this is my field of expertise, it's not as simple.
Yeah.
Sure.
But there's certain things. And I know it might sound like it's cliche, but they say the three most important things in property are location, location, and location.
Yeah.
So,
Yes.
so that's firstly, like where you're buying, like, is it a good node? Is it a growth node? What's happening, economic activity around there? Again, then you got to ask yourself, what subsects is it of the property market? Are you talking about a residential property? Are you talking about an office building, a retail property, an industrial property? But ultimately, the main things are you want a good quality building that is in a good location, and that you've got a good counterparty in terms of a tenant. You want a good tenant. Just like how when you go and look for an apartment as an individual, they run credit checks on you and all things to make sure that you're good for the rent. And even commercial property, it's the same thing. When we look at and I evaluate deals, we want to look at, okay, who's the tenants? It's a company that makes, I don't know, widgets or whatever the hell that they do. Do you remember in every finance exam in university, every company makes widgets.
Oh my God.
So if they make widgets, you want
OG finance exams.
So if they make widgets, bro, you want to get the financials of the company. So you want to understand your tenants. Because essentially that's your risk. You're not taking a risk on the building. You're taking a risk on your tenant. Because that's the person who pays off your loan and the person who pays you your rental and pays off your loan and whatever. So those are some of the important factors. And what was the question again, Nico?
What are the factors to consider before going
I think those are things. Just like a good building and a good node, good location where you've got a solid tenant, and get your capital structure right. Yeah. Because you don't want to overgear.
Yes.
Overgear, I mean, is borrow too much against the property. So you don't want to overextend yourself, because interest rates are obviously, you don't control them. They're subject to monetary policy. The interest rates can go up overnight. We've seen it from COVID, where interest rates were almost, I don't know, wherever they are, lows, and now it's at a 15-year high.
Yeah.
And then all of a sudden...
And the Twitter influencers were saying we must buy.
Hey, the influencers.
Hey, man, come on, man.
The influencers.
A lot of property experts out in COVID telling us to go buy apartments. But so obviously you want to give yourself some breathing room, that if the cost of money starts going up, you're able to absorb that. Yeah, that's I think so. I would say those.
But with that said, right, I think the big question now is, in day one, should the property be on the profit making? When you put in your loan repayments, when you put in your levies, when you put in your maintenance costs,
yes.
What's the probability that you can find a property that in day one is in the profit?
We call it washes its own face.
Yeah.
That's essentially it. You want a property wash. Look, in this environment, it's particularly difficult just because the cost of money is so high. Yeah. Like I said, the prime rate's at 11.75%. It's at a 15-year high.
Yeah. I feel that thing, man.
the last time it was at this rate was just, during financial crisis. Before that, the last time the interest rates were this high were in the late 90s, when the governor of the Reserve Bank, Chris Stolz, almost pushed rates up overnight to more than the 20s. So people think rates are high now. You think rates are high now, bro?
It's been bad.
Historically, in the 90s, there were some points where rates were 20%. Okay, so you never know. So ultimately now, for a deal to work, or for a property, for you to make money, that means, what Chief is basically saying is you buy a property, you put your deposit down, you finance the rest, and then your rental that you're getting from your tenants is able to pay for your bond, your rates and taxes, and all other property expenses. So you're basically making a profit. Yeah. It's very difficult in this environment to get that to happen from day one, just because the cost of money is so high. Yeah. The only way you do that is if you're putting a lot of equity being your own money, and you're borrowing little, because then you don't have a big bond to pay off. Right. So then you've got to find the equity. Yeah. So it's very difficult. I think and that's where a lot of landlords are feeling the pain at the moment. Yeah.
One more question here on social media from Sibonga Mandla Mkhize. Is asking, how does one get into commercial property?
Yeah, commercial property, I mean, it's basically what we're speaking. Your best thing is to own REITs. Like I say, just REIT. There's a lot of, you're going to own some quality assets across. Yeah. There's so many counters, and there are certain REITs that focus on certain subsects of the markets. I'll give you an example. There's a REIT called Equitas Property Fund. All they do is logistics and industrial properties. Wow. They don't do anything else. So if you like a certain and that's actually the darling of the market right now. That's the sector that's returning.
Because you're going to get the ShopRite and the guys come.
A big part of that is the distribution centers for retailers. Yes. Because of online, company like before retailers used to have a lot of floor space and pack all there, and they'd have like a storeroom at the back.
Yeah.
Now, because of the technological advances in how to manage stock and how quickly and central distribution, a lot of these companies have warehouses where they have technology that can, and then they distribute to the various shops. So you get like Equitas is the biggest landlord for all of ShopRite's DCs, distribution centers. And there's the Take-A-Lots of this world. There's so many online companies where they don't have physical shops, but they have all the stock. So
and Amazon is coming as well.
Yeah.
So
they've arrived.
They've arrived. So you've got you've got just your manufacturer or almost mom and pop industrial business that manufactures widgets, and they keep them in the warehouse. So industrial is the darling of the market. So for example, you could buy Equitas if you wanted exposure to township retail, for example, which is also another darling of a sector. You could buy township retail. Again, it's a subsector. Retail is a subsector. It's all shopping centers, shopping malls. It's basically what we call retail. There's Dipula Income Fund, which is a big focus on township retail, which is I would disclaimer, I own some Dipula. I really like the share. I'm a big believer in the township economy. I'm a big believer in that these sectors of the market are undertraded, meaning that there's not enough shopping centers in those areas. And I'm going to give you some interesting stats on shopping centers in just a bit. So I'm just finish my train of thought here. So you could buy what's the word? A Fairvest is another REIT that has a focus on convenience retail. Convenience retail are your smaller, so you get super regional malls, like think your big ones, Sanson City, Gateway. Those are called super regionals. Convenience are your neighborhood shopping centers, the one where you drive down the road. There's a little pick and pay. There's a pharmacy. It's not that big. It's less than 10,000 square meters. There's a REIT that has a big focus on that. It's called Fairvest,
and they're doing very well.
And they're doing well. So it depends. And there's certain themes playing out in real estate in the market right now, right? So you got to think. And I think for me, like how I invest in the REIT stuff is I see what the themes are playing out. So on the malls, right? So now I want to give you some stats. South Africa, I think it's the second most shopping centers per capita in the world. So we have too many. We have 2,400 shopping centers in South Africa. We've got another 100 planned for this year. That'll obviously get finished next year too. So we've got a hell of a lot of shopping centers, and some areas nodes are overtraded. And you got to think about, you start worrying is like, obviously there's the supply and demand. We are a growing, an emerging economy. So as the more middle class emerges and the economy starts to grow, people start, moving into urban areas, you probably start getting footfall into those shopping centers. But if I would say, I don't know the stats, but if I were to look at urban shopping centers, so ones in the cities, as a portion of the ones in the townships, the big play. Now, if I'm a shopping mall owner, I do not want to own another shopping center in Bryanston or in Fourways. Like Fourways Mall is in a whole lot of hot water right now. Accelerated property, Fourways Mall, it's all in the meter. They're in a hot water.
It's been difficult. It's been tough.
They're having a lot of tough times, So
tough time,
I don't know.
But it's in a very good location.
Oh, there's a whole lot of things happening. They planned like a billion rand capital expenditure to expand the mall, and then COVID hits. There's a lot of double whammies, man. It's just a lot of whammies.
But also just from a user perspective, that mall is so complicated.
Apparently they got things wrong.
Bro,
like the parking.
It's so
I'm not from
complicated.
Joburg, so
I always get lost.
It's shopping there.
It's so complicated. For absolutely no reason.
And also occupancy. Whenever I'm there, I always see
there's a lot of vacancies, massive vacancies.
I can imagine.
So my point is, so for me, so when I see councils like a Fairvest, like a Dipula, there's a company called Exemplar REITs, which is owned by the McCormicks. Exemplar REITs is the only REIT that has a pure focus on township retail. And it's one of the most performing REITs on the JSE, best performing. Exemplar, just check the share price and what it's done. Exemplar only owns shopping centers in rural. They do township and rural. So if you go in, I don't know, man, in rural Eastern Cape, they're busy with something there, in whatever, in the Free State. I'm just saying, like, wherever, go there, they'll put up the thing with the shop rights.
What is it again?
Exemplar. So like
Exemplar.
it's EXAMPLAR. They are. So they've got shopping centers in like the most remote areas because bro, people don't have money to get on a bus or whatever for an hour. You just put what the people need, man. People need a ShopRite, they need a KFC, they need a pharmacy, they need a clothing shop.
And that's it.
And that's the economy where the social grants are being spent every month, right? So there's a lot of spend. And because it's not like you're getting on a call it price per wallet, like you're not getting a lot of per wallet spend, but you're getting numbers.
Yeah.
Right? Because you've got it's the only shopping center in a 50 kilometer radius. It's in a 50 kilometer
It's 11
radius.
Rand 50. Yeah.
What's it done? Like
What's done in the past 5 years?
It's grown distributions. You must remember you're getting the distributions, right?
That is true. That is true. Let me just check out
in the past 5 years.
Let's check out in the past year.
Cumulative return should be good with distributions.
Okay, in the last 5 years is 21%.
Oh, that's good.
In the last 5 years, in the last 3 years is
that's just the share price.
Capital. That's capital growth.
You're probably getting a yield of like 9-10%. So you've got to add every year to that. So you've got to add that to the return.
So like you've been doing quite well if you've been owning this year.
Yeah, you've been doing all right.
No, man. That's
So
okay.
look, so yes, I think one aspect is getting the optimum capital structure, right? I mean, if you're financing
also
a property,
on capital structure on REITs, right? So REITs are by law not allowed to be more than 40% loan to value.
Yes.
Really?
Yeah, they're not allowed to go more. So then that actually then prevents them from being over indebted. So there's a very little chance that these companies fall over. But there's been some ones that got in trouble. Rebosis went to business rescue.
Yeah.
And we can get into a whole. We'd need a whole episode to get into that. And so a lot of them REITs, let me not say, because there's a whole thing about valuations with REITs. I mean, again, I could go down a rabbit hole, but essentially there's regulations that like try to make sure that these guys don't get overgeared, because in property, too much debt can kill you, right? Like in any business, right?
Yeah.
So they should be at 40% loan to value. But then the question is, what is the value of an asset? Because the value of an asset
remains,
but it could there's a thing where people felt like REITs were jippoing their values to keep the LTVs. So the value, what they say the values are, is not really what the value is. And especially after COVID, you a building, because a building is only.
Then why don't they then say do a metric around loan to cost of
No, because you can't do loan to cost, bro. Because I could buy a building from you today that's empty, vacant, and I buy it for you for next to nothing. I put a liquor paint on it. Do some
Fair enough.
Change the lifts, put a liquor paint, get a nice tenant in there, and all of a sudden it's worth double what I paid for it because I created value.
Yeah.
So you can't do loans to cost, you got to do loans to value. But the question is, what is the value? But the point is that we're speaking about capital structure. It's important that REITs they maintain a low level of debt.
Yes.
So they can keep paying the 75% distributions to shareholders.
No, makes sense for me.
40%, that's quite good. To maintain loan to value of 40%, that's quite good. So basically, I think we have explained what loan to value is, right?
Yeah, loan to value. It's quite self-explanatory. But to explain, it's what your loan is on the value of a property. So if you have a property that's worth 10 million and you've got a loan of 5 million, your loan to value is 50%.
Yes.
Exactly.
It's really straightforward.
It's very straightforward.
That's it. Yeah.
So from a residential perspective, right, if I'm going out and say, I want to buy an apartment somewhere, right?
Yeah.
It's in a good location. It's in a good location, right? So what would you say is the optimum capital structure for me as an individual to go and buy a property somewhere? I don't know.
Yeah, man, I think it differs from individual to individual because I don't know your financial situation.
Yeah.
But ultimately, your loan you can afford. Like even when you go apply for a bond for your house, banks calculate your affordability on your income, right? So Nico could afford this mansion in Camps Bay because he's got all these dividends from Capitec coming through to pay off his. And I could be. So essentially, what I'm trying to say is that they assess you based on your own cash flows. Because ultimately, you've got to have the cash flows that can pay down the loan. When you go buy a house, for example, it's your salary. If it's a commercial property, it's the actual cash flows that the property is generating in and of itself. So that would be the actual leases, and then you've got to run this. I know, I think the principle is that obviously when interest rates are low, you've got to put in less equity because your debt burden is low in terms of what you have to pay back. But when interest rates are high, to make it work, you've got to put in more equity to make. That's the principle. But I think a conservative way, with 50%, 60% loan to value is probably like, that's what you should be doing. On residential property, again, I'm talking commercials, 50 in this market, maybe. Once you start pushing above 70%, just because of where cost of money is, deals start not to work from an income and serviceability perspective. When I say serviceability, I mean that is the ability for the cash flows to actually service debt after taking off all the operating expenses of the property. So, and again, that is just purely a function of the cost of money at the moment.
Cool.
Yeah. That makes sense. That makes sense.
We got a proper masterclass, and I think it'll be a good place to actually dial down the conversation.
Yeah.
And I want to ask a bit more personal question. If for someone out there who wants to get into property at a higher level as you are today, what are some of the steps that you've taken to your career to get you to this far? From KZN up until now in Cape Town. What are some of the things that you do?
And we really didn't get much into how you got
that to the end. I think that's when you go.
And then we are here because I had some questions here who basically wanted to find out a bit more about
myself. Man, I'm happy to get into that, obviously.
I think that would be quite helpful.
Yeah, man. I'm from a sleepy hollow in the south coast of KwaZulu-Natal called Port Shepstone. I was born and raised there for 17 years of my life. That's where I lived. Look, I mean, I've just been fortunate, bro. Like, I mean, I think I had fantastic. My parents divorced when I was fairly young. I don't have a great relationship with my dad, but I've got a fantastic relationship with my mother. My mother's my best friend, and my mom was always a big proponent of education, man.
Wow.
And then I was always into business, man. I don't know why. I just was always. My first job I worked for, I had a mate. His name was Zakaria Mohammed. His dad owned hardware stores and some other businesses. And I just started, like, when I was 14 or 15. I went to Zach. I said, Zach, can you ask your dad to give me a job? I was just inspired because Zach had all this cool stuff in school, right? So I knew, and his dad was the businessman, and I just wanted to learn. And I started, like, in the hardware store, like on the points of sale, bro, lifting bags of cement and packing shelves. And but I just got to spend, like, just because the guys, that was my first job, 14 or 15 in December. I was earning something like 80 Rand a day. And then I just got into business. And then, I was very fortunate. I think when I finished matric, I finished with, like, very good marks, had an A aggregates, you know, I got good marks for maths and accounting. I was always very good at accounting and stuff. And then I went to
You see, the cycle of me, it's just accounting people around. I gotta expand my cycle, man.
Yeah, me too. But
a lot of beat councils also have I got a lot of all of my mates are CAs and finance people. It's like, and you end up being
we all did accounting.
And then you end up being one-track minded a bit, right?
Yeah.
So I studied a BCom in accounting in the University of KwaZulu-Natal. I did have aspirations of becoming a CA, but I think I've got too much personality to be a CA. That's what people say. Nah, man, look, I did the CA thing. I never finished. It was tough. But then I got into entrepreneurship for about a year and a half because you remember we made the Finbond money and we had 21, 22. I tried my hand at entrepreneurship. People often ask me how did entrepreneurship work out for you? I'm like, if it worked out really well, I wouldn't have a corporate job. So don't ask me.
That is true. That is true.
So don't ask me. No, but you know, there were a lot of lessons. No, man, like there were a lot of lessons in entrepreneurship, but then I really wasn't for me.
Yeah.
I'd always been into finance, the stock market, banking, and I was reading up on all that stuff. And in 2017, I started working for one of South Africa's big 5 banks. I started off as a private banker. I had a mentor who worked for the same bank, and he was a real estate investment banker. He was in real estate finance. And I always liked, so that was kind of an inspiration for mine. So I did a private banking for 2 years. And then in 2019, I got into the real estate investment banking team, or the structured property lending team. I was at that bank for 7 years. And then I left in February of this year. And then I've just started at another big 5 bank doing the same thing. I'm a vice president in the corporate investment bank doing commercial real estate lending. And that's me. I've been in Cape Town for 7 years, man. Just a Zulu boy, just in Cape Town doing what he loves, man.
Doing what you love. I think the kicker here that I want to know is the work as a private banker and being a real estate financier, worlds apart, right?
Very different.
What are the steps that you took in order for you to position yourself to be now
That's a great question.
this
Great
big
question.
shot guy
That's
to
a
be?
good, no, man.
'Cause
No,
you know,
I'm not a
like,
big shot, man. Come on.
no, man, I work with bankers a lot, right? Like when a banker walks in a room, you know there's
can
an
feel it.
expert in the room.
You can
right?
feel it.
There's an expert in the person with money. That's,
I'll take that.
Yeah.
So what are some of the steps you did to actually upskill
man,
yourself to get to that
for
point?
people watching this, I think this is important. Like
Yeah.
you've got to differentiate yourself in your career. You've got to make yourself stand out. Look, the one piece of advice I'd give like young people starting a career, no one's going to give you an opportunity to do something else if you're not doing well in your current job. So that's the
wonderful.
first
That's
thing.
powerful.
Wonderful.
So you gotta, whatever you're doing now, make sure you're doing it well.
Yeah.
And then whatever you've got a keen interest in is like, show the keen interest. So I was going to talk, our real estate team guys used to sit down the passage in the same floor. I'd go to the guys all the time, like, what are you working on? Oh, cool, I'd spend time. Then guys get to know me. Then, guys look at this kid, he's always around, they're sniffing around.
Sure.
Yeah.
And I'm like, you guys are going to present a deal. Can I come listen in?
Yeah.
Can I go to a meeting with you guys?
Yeah.
And then all of a sudden it's like, then someone's like, oh, Senzo, we need help with this. Can you just help? And then an opportunity comes up and they need someone in the team and you put your hand up and then they're like, oh, well, this kid's always like here sniffing around.
Yeah.
He likes okay, let's give him a shot. And then, that's really that's the story,
Wow,
man.
wonderful.
Wonderful.
That's impressive.
That's amazing.
And did you have to do any formal education to upskill yourself?
I did at the suggestion of my boss at the time, which was actually quite
Okay.
valuable.
Yeah.
Man, I believe there's a saying like formal education will make you. Formal education will make you a living, but self-education will make you a fortune.
Yeah.
So I'm always learning,
Proper.
bro. I'm always
dropping bars, brother.
Proper.
I'm always learning.
Dropping
Man. I'm always learning.
I
Every
truly
day.
believe that too.
Yeah.
So for me, with real estate, like I'll tell you a story also about my journey, right?
Yeah.
There was a friend of mine I had in university. There was a forum called the Young Jewish Business Forum, where these Jewish guys put together a forum of young guys and they would get in businessmen to come speak.
I think I remember it at UJ. There was a society like that at UJ as well.
society. There was similar society. It was society. And then one day they got Mark Wayner to speak.
wow.
May soul rest in peace.
Yeah.
The late Mark Wayner founded Redefined Properties, which is the
I
second.
remember Mark Wayne.
This is the second biggest. I'll tell you a story. Second biggest listed REITs in the HSE. At that forum, my Jewish friend invited me. Said, "Come through." So the thing, I listened to Mark Wayner. I had all these questions that I knew about Redefine and Read Up, but I knew he was coming, so I also prepared. And I kept putting my hand up to ask him like a ton of questions. And at the end, at the talk with all these university students, he gives a talk and he goes, "I like you. Ask good questions. Come spend a day with me at my office sometime."
Wow.
Look at that.
And then I took gave his PA's number, I set it up, I spent a day with Mark Wayne at his office, man.
No, it's epic.
Wow.
It's,
And I was
it's really
21 years old, I was in
That's
varsity.
some wonderful
That's
stuff.
just like initiative and learning and man, and just loving just having a passion, So I think that's
And I promise you, Senzo, like everything that you're saying, it resonates so much within us. Like if we had to share our stories, and I'm hoping that after this, even not just after this, but like we can share our stories. They're so similar, bruh.
Yeah. It's
It
so
literally,
similar.
it's a seminar.
there's a sort of formula,
There is. There really, there's somewhere, there's a seminar where we lift up our hands and then someone sees us. I've got a similar story.
Yeah, man.
That's exactly what happens, man.
Nah,
But are you
that's
loving
it.
the property finance team now?
Yeah.
Are you enjoying it?
Well, I've just rocked up to a new bank. Man, I've got a great boss.
Yeah.
I'm sure he's gonna see this.
He's gonna
man.
watch this.
He's gonna watch this, man. No, he's amazing, bro. He's
You're not just saying because
he's gonna watch this. He's really cool, bro. Like he's a supportive dude, and he backs me. There's nothing like you have faith in your own abilities, but you need someone to believe in you, bro.
That's true.
You know what I
You're
mean?
responsible.
And he's been cool, and it's a new team, man. And I still wake up every morning. Bro, I open my business day. I get to speak to my clients who are entrepreneurs developing all these high-rise buildings.
Yeah.
And we get to discuss bro, there's nothing like driving past a building and you're like, I financed it. You're like, I made that happen.
That's
So that's
wonderful.
what, man. I still can't believe I can wake up and I get to do that every day.
Yeah.
It's really cool, man.
Senzo, how do people get in touch with you, bro? Like, what are some of your socials?
Man, I'm not really big. I don't have an Instagram account. I'm not active on Facebook. LinkedIn, man. Hit me up on
LinkedIn, yeah?
LinkedIn. I'm a LinkedIn guy. Yeah. Try
LinkedIn.
to really stay off the social media thing. And I'm busy, man. I really And also
That's
a lot
it, man.
of
That's
people
true.
live life online. I just believe I'm busy doing stuff like actual with real people.
Yeah.
Sure.
Like on podcasts with my mates
Yeah,
and
exactly.
and outdoors having
Wonderful.
fun, like
Wonderful.
that type of thing.
What is your parting shot for the people that are watching, like we have shared your journey, which is very inspiring. I think so many young Black people out here, like Nico said, the stories become similar, right? You got to knock on these doors. There's one question that I was on another podcast of my friend. She asked me, what is it that you can say to a young person that, you know, wants to be you? I'm like, you just gotta keep knocking, man.
Yeah.
Like someone out there is gonna hear you. Like you gotta keep
it's
knocking.
daily efforts, man.
Yeah.
It's daily efforts. And when you find that thing, whatever it is, man, I don't care what it is.
Yeah.
You're gonna find that thing that when you go, your eyes just light up.
Yeah.
And when you find that thing, you're gonna find it. You don't even need motivation.
Yeah.
Like, bro,
Exactly.
I never like work for me. It never really feels like work.
Yeah.
Yeah.
Because you love what you do.
Yeah, you
right?
enjoy it. So
You love what you do.
and then you just but then there's discipline's important. You gotta and you gotta be disciplined. You
Exactly.
gotta work hard. No substitute for hard work.
Yeah.
That's true.
You gotta
Show
grind. You
up,
gotta be clever.
gotta grind.
Networking for young people, man. Network.
Yeah.
Like just be out there meeting people, man. And you learn from everyone you meet. You know.
Yeah.
Yeah.
Definitely.
Oh, wonderful, bro. This has been absolutely
Jess, this
amazing.
is so much fun, man.
Yeah.
Thank you guys for having me. Man, I might start my own podcast, man. This has been
By all means, by all
this has been so much fun.
We'll be your
bro.
first guest, eh?
Yeah, my first player, yeah, man. Have you guys on my point? We're gonna get the
Exactly.
setup going. Yeah, you guys have this
Exactly.
beautiful.
No, that's epic, man.
Oh man,
and
this
we have
is,
a
guys,
bit of a
thank
cult.
you
We have,
so much.
we have a
Thank
bit
you
of a
so
cult,
much.
we have a bit of a cult following, bro. Like it's oaks that are employed professionals that are doing well in their field and want to get into invest. So I think they'll appreciate this.
Yeah.
Especially when I told them that, like, listen, we're having a property guy here. They're like,
Nice,
don't
bro.
you know?
Nice. No,
Because I
guys,
think
Thank
you so much.
property-
No,
Thank
man,
you so
appreciate
much
it.
for
It was
having
nice.
me,
It was
man.
nice.
Thanks so
Thank you
much,
so
man.
much.
This has really been good,
Thank you
man.
so much,
Oh,
people.
wow.
Yeah.
Thanks a lot,
Cheers, guys.
investors, and please like, subscribe, and comment, and yeah, cheers. See you the next time.